This morning, though, we're talking about alpha strategies. And today's fast-changing markets driven by technology, volatility, and shifting global forces, creating lasting investment advantages requires sharp focus and fresh thinking. That's why we have these gentlemen here. Our panel will share practical insights on where real opportunities lie. We'll discuss current market disruptions, how to build strategies that can endure, and the pros and cons of alpha in the private markets. You'll hear a perspective of balancing growth with protecting your base. The role of gold in uncertain times. This gentleman right here will certainly elaborate on that topic. And where alpha may be hiding outside the United States. Our aim is to give you a couple things to walk away with this morning, a couple nuggets that you can take back to your office and start discussing them and putting them into motion. So that's where we're headed for. And to help me today, we have Tyson Halsey, you just heard, Rob Lay, down at the end, Andy Fish, right here close to me, and Sasha Grutman, partner in Middle Market Partners. My name's Mark Heil, and I've been in the alternatives since the mid-90s, in marketing, capital raising, in all different areas. I'm currently with Pickwick Capital. I'm a managing partner there. We are a FINRA-based mergers and acquisition group and capital raising group, dealing a lot in the area of defense, security, technology, energy, all the above. So one of my favorite parts of this is doing our disclosure, so let's get that out of the way. This panel discussion is for educational purposes and not to be considered tax, legal, or financial advice. To the extent that one of us offers an opinion, it's our opinion alone, not necessarily that of our firms. For the next hour or so, we're going to be discussing alpha strategies. I invite the audience to participate in that. Don't wait. Get it when it's fresh and you're talking about it. This is going to be a conversation that takes place up front. Join into the conversation. The only thing we ask is be direct and concise with your questions. If our panelists need more context, we'll ask you for some additional information. But please join on in. And with that, I'm gonna start with Sasha, if you would. Just give us your background and just tell us a little bit about yourself and Middle Market Partners.
Can you hear me? Oh, yes, you can.
There we go.
All right, I'm Sasha Grubman. I'm one of the co-founders of Middle Market Partners. We are a New York City-based merchant bank. So what we are really trying to do is combine the advisory of an investment bank, both on capital raising and M&A, with selective co-investment in some of the deals that we bank. And we co-invest alongside lead sponsors. We focus on three sectors: financial services, where I spent almost my entire career, focus very much on I have been for over 25 years, really the intersection of technology and how it's affecting and reshaping financial services broadly, tech-enabled business services, and we added environmental services, which has waxed and waned over these last 8 or 10 years, but continues to be a real area of focus. And we do co-invest in all three of those sectors. And we focus on both venture stage companies, growth stage companies, and more mature deals.
Fantastic. Rob, would you do us the favor and introduce yourself? Tell us about Amont Partners.
Yeah, sure. Hey guys, so just a heads up, I have a meeting at 10:30, so I have to get out of here by 11:25. So in case I leave in the middle of the conversation, like not because I hate my fellow panelists. So my name is a moderator. So my name's Rob Lee. I'm very glad to be here. I started my career in private equity, doing buyout with Morgan Stanley Capital Partners. That's almost 20 years ago. The last 11 years, I spent most of the time on the public side with Tiger and JP Morgan Asset Management. So now we run a shop that I would say, really take a private equity approach to public market investing. We spend 85% of the time on the street, public equity side, global, three sectors, tech, consumer, industrials. 15% of the time we spend on activist strategy. So we've done Yum China spinoff from Yum in the past, a merger of Avon with Natura, a Brazilian cosmetic companies, and we're currently working on Ben and Jerry's ice cream, the potential management buyout from Unilever. We can talk about it because you already see this. You guys already read it on the Financial Times, but public. So that's what we do. I'm happy to have a conversation with our panel and with audience.
Andy, if you would do us the favor.
Sure. I've been a professional fund manager for 41 years. The first 20 buried inside quiet European multifamily offices with no sign on the door, doing hedge funds and venture capital. In 2004, I went to the dark side and I ran State Street's global fund of hedge funds for 15 years. And then 9 years ago, went back to the family office side. We do only co-investments in income, one side, growth on the other side. And the easy way to explain it is if JP Morgan sells it, we don't do it.
Terrific. And Tyson, would you just do a quick 1 minute reminder and refresher for everybody?
Tyson Halsey, I've been in the business for 40 years, started on the floor of the Futures Exchange, Merrill Lynch, Alex Brown, as a retail and institutional broker before venturing off on my own. I have a startup in the energy space, and which is one reason I'm very interested in the commodity to S&P ratio. And for my investment advisory, right now I primarily am focused on a separate account hedge fund strategy focused on knocking the cover off the ball in emerging miners and derivatives on larger cap gold stocks. Gold miners.
So I want to start off with a quick discussion about what alpha is. And I'll just relay this quick story. When I was in college, I had a professor, Shelley Novak, and Shelley taught the capital asset pricing model. I had him 3 times. And every time I had him, you had to calculate that thing. And back in those days, it was with a calculator and involved betas and involved alpha and involved square roots. This was not an easy calculation to do. But it really gave me a great sense as to what these terms mean. But what I'm going to do here is I'm going to toss this over to Andy. Why don't you talk about alpha and beta and give everybody an idea of what we're talking about here today?
Yeah, I just want to spend 1 minute. I hope this doesn't sound too sort of down, but beta versus alpha. Okay. Tyson had a whole bunch of charts on different things. They're all beta. Gold, stock market, credit. It's all beta. In fact, I believe, don't quote me because I can't remember every statistic, about 50% of the stock market is indexed. That means nobody's making a selection as to what they buy. They're just buying half the stock market. But there's beta in venture capital, there's beta in real estate, there's beta in private equity. Okay, so let's put all that aside because that's not what the panel is about. Okay, and talk about alpha. And then considering from the last panel, after these guys go, I want to start with AI because there's so many misconceptions about AI. And I want to talk about AI as alpha, not as beta. And he talked about the internet infrastructure obsolescence, some of the audience, all correct. That's only one side of it. But AI as a tool, we'll talk about alpha.
I'd just like to take a slightly cynical view about this topic. I think it is very hard to distinguish alpha from beta. In fact, the older I get, the more I believe my alpha is market beta, because I see that when markets are good, I look like a genius. And when markets are bad, it doesn't matter what I do, things don't go well. And so, I want to just challenge everybody. There's a lot to alpha that is beta, but there is an opportunity to identify unique things about specific companies and opportunities that I consider to be the alpha. So if you can find an idea that's unique and that's executed in a unique way, that does give you the distinguished superior performance that you're looking for. But most of the time, it's market beta driving that perception. And we see that in so many sectors.
And I would agree. I mean, always the way it's presenting the capital asset pricing model, which I know very well, it's a measure of volatility, right? So if you're doing beta as a measure of volatility, so a negative beta means you're doing the exact opposite of the market. If you have a 3 beta means your volatility is going to be 3 times greater than the market. Alpha is the measure of your outperformance of the market. So if you have a high beta and a high alpha, it's a very good thing. But if you have a negative beta, and then never mind.
Well, to this point, I mean, to make it simple, you can have beta and add alpha to it. You can, instead of an index, you can buy a manager and they're doing better than the stock market. They've added alpha in simplest terms. You also can use betas in a strategy that generate alpha. My fund of hedge funds had no correlation to the stock market. So in theory, mathematically speaking, it was 100% alpha. I mean, that was at least the goal. So that doesn't mean inside of it, there was none. But I agree with your point. So
Yeah, no, I think Andy has a great point. It's really about when we think about alpha or betas, right? It really comes down to uncorrelated return, right? So like when our clients look at our performance, they compare our performance versus not just over a market, but the other managers invested in, right? If the income stream, the return stream we generate has very low correlation with the 10 other managers that invest in, that's value add to them, right? So when we think about this, it goes back to his point, or Saj's point earlier, something really under your control, whether you have a superior understanding of the business, something the market's not seeing, or, when we go activist, obviously that's on our control because we go on the board and push companies to do the right thing or in the driver's seat. So that has less to do with how Trump's doing about the economy, was a trade war, was AI bubble or not, something's under your control that you have heavier influence about the outcome. Then you can drive more alpha.
So lack of correlation, because I did this for a living 15 years, is an easy way to measure alpha, as I just described. But to your point is the hard one. Being a contrarian, basically playing beta, is a great way to create alpha, but only under certain circumstances. So I don't think it's as simple as saying lack of correlation equals alpha. I wish I did, because that was the marketing pitch for 15 years, but it wasn't my job. But I know what you're saying, but I don't think it's the only way that alpha is generated.
So Tyson, are you negative to the market right now? Is that what you're saying?
Well, I think there's a very interesting intellectual conversation going on here, distinguishing between beta and alpha. And beta has to do with leverage. It's relative to the benchmark. And, you can outperform and say, hey, I outperformed the S&P by 10%. And well, you just bought levered S&P ETFs. That is not alpha. Actually, the source of the alpha is the leverage that you're utilizing. And while there was a lot of leverage that was embedded in what I was talking about, one of the points that I wanted to emphasize is I think that there's significant alpha in emerging markets, international stocks, gold, silver, gold miners, and they are non-correlated to the S&P. I certainly think that gold and gold miners, arguably during many periods, are inversely correlated and are a very logical source of alpha, particularly if you want to be de-risking portfolios. So in theory, if I were to run a larger hedge fund, I would be short the S&P, I would be short the NASDAQ, and I would be long emerging markets, international, and commodities with a heavy emphasis on the monetary metals and their miners.
So Andy, I want to just throw out, give me 1 second, I'll get to you in a second, Steve. Marty runs his podcast called Resilient Alpha, right? Is that really possible to have resilient alpha for a long haul?
It's hard work, and it is not a set it and forget it way, but it's possible. I mean, I'm not gonna. I can brag because I don't have the job anymore. It's public information. 15 years, we had almost zero correlation to stock markets, credit markets, whatever. So did we make tons of money? Well, if you grow it over time, yes. So 5 years before, during, and after the GFC, we were the top rated risk adjusted fund of funds. So it was possible. Is it easy? Is it always going to work? No, because you have to take risk for everything. But what we did intentionally, goes back to the statement at the end, was try and neutralize betas by having different forms of alpha where the risks offset each other. Now, in a global 26 country multi-asset fund of funds is a good tool set for doing that. It's harder to do in your own portfolio. But is it possible? Yes.
Gotcha. Steve. Here, let's get him.
What techniques or tools are you aware of or have you used to mitigate beta and secure alpha? Because that's the way to make sure that your returns are achieved, mitigating beta. And that could be done.
So I'm going to answer this question probably in a way that isn't directly related to the way you want to ask the question, because I work primarily in private markets. Almost all the companies that I work with are private. What I look for in clients and for the investors that I introduce to my clients is companies that have outsized potential to exceed market performance. And they're either they're out executing the rest of their peer group, or they've come up with something truly new and differentiated. For me, that's what I consider alpha. So if you can separate yourself from the pack on the upside, or you can minimize the amount of downside you're experiencing through differentiation, that's what I look for. I think right now we're in a market where there's tremendous herd mentality around a whole bunch of investment ideas. And so everybody's piled up the same ones. And we concentrated ourselves, even within the S&P, on a very small number of stocks, which I really find nerve-wracking because we will ride and fall with 10 companies. But I like finding nichier opportunities that seem much more digestible and achievable, where you can have market dominance, you can have structural advantage, you can have asymmetry of information in a way that gives you long-term sustained outperformance. And that, for me, is the alpha I'm looking for in my clients.
Yeah, so I would say from a public equity perspective, there are a couple of layers. Number one, we don't use any leverage, right? So that removes the what we talk about using leverage as a fake way to maximize your beta exposure. Number two, we'll have very low net exposure because we do have a very active short book. So our net exposure typically 30%. We're up like roughly 28% year to date, was only 30% exposure in essence to the market. So that's something where we take pride. And number three is going back to Satish's point. So we're really looking for private or public market, something idiosyncratic, has less to do with the macro, less to do with US GDP or trade war with China, anything like that. So I'll give you an example. We invest in a company, it's called Fortress Aviation, that literally repair engines for commercial airlines. Money Water, which is a very famous short seller, published a report end of Jan and say you're not fixing their engines. You're simply just trading engines. Stock came down 50% in 2 days. Now that became a very interesting opportunity for us because we've studied the industry for a long time. And we know they have like 12 clients. They have a little bit more clients right now. Back then they have 12 commercial airline clients. And it's easy to call the clients, talk to their procurement department, and understand, are they fixing your engines or not? Because if they are, we make our money. That's less to do with Trump, less to do with China, let's do with a bubble. If they're doing that, we make money. If they're not fixing their engines, we don't make money, right? So if you call them, you can say understandable because each commercial engine has 3 modules. Each module has a serious number, which is like your SSN or birth certificate. It goes with you for entire life. So if you just come verify the 3 serial numbers, are they from the same engine? If they're from the same engine, they're trading the engine, they're fixing the engine. If they're from the 3 different engines, then yes, they are fixed engines. So once we know the answer, we have very high conviction that Money Water's wrong, we're right. Eventually, market will realize Money Water's short report was a mistake, right? And then since like the stock has recovered, right? So that gives them takes flavor in terms of the opportunity, the type of opportunity we're looking for in the market. That has less to do with the overall market, over economy. We're just focused on the one thing that plays out. We can generate that return, and we call that alpha.
So I mean, we too, at least now, live off niche opportunities, and I think it's for a panel tomorrow. Tyson talked about Burry and Paulson. I did The Big Short with John Paulson, but so speaking of betas in 2009, we re-underwrote mortgage portfolios, 0 leverage money good and just went long something that nobody wanted to buy. So I don't know, is that beta or alpha? It was up 91%. We just owned pools of mortgages. So in a way it's beta, but the alpha was using that beta. So I'm going to put like two things to bed, and I'm going to talk about something I was on last week, which is the opposite of niche, which is at least where he and I live. Well, your niche in that you have a concentrated portfolio. So that could be too. So this is the opposite of that. And I'm not in this business anymore. So I'm not selling anything. And everybody in the audience knows these people. I was on a call with the credit group at Apollo last week. They run 690 trillion or billion. I can't even remember. $1 billion in credit. Okay. So not small. Okay. And I was invested with John Zito, was heading the call, but he put on his group that's working on AI. So let's take AI infrastructure, put that aside, forget it. AI as a tool. Okay. It's not a thing. It's not an asset. It's a way of doing research. Another tool. Okay. This is what they did. They set up a whole group, and you can probably get the marketing material from Apollo. They have a whole group that is using an analysis, not AI, but they have a spectrum of industries across, think left to right, red to green, of industries that are going to benefit from the implementation of AI. And on the red end, industries that are going to be negatively impacted by the implementation of AI. This is not AI. They're not using AI. They are looking at the investments they make in credit by industry and looking at the impact of the implementation, not the infrastructure, of artificial intelligence. And I think it'll come up in healthcare and some other topics too. So that's alpha. That is alpha in one of the biggest managers in the world.
Rob, I know you're speaking a little bit later this afternoon on the whole topic of AI. You certainly asked Tyson some questions, but you're also a fairly large investor in AI. Why don't we get him a mic? Do you have any comments today on what Andy just said? You thought you were safe out there.
Yeah, thank you for giving me no heads up on this. Yeah, I think it's interesting. I sat in also on a similar kind of meeting at Blackstone a couple of weeks ago, and they were talking about something that kind of blew my mind. They were saying that there's a herd that's running the other way, away from Chinese equities, public equities. And they pulled out a similar chart among the top, I guess, 30 industrial companies in China versus the top industrial companies in the US. And they're looking at AI adoption. It's the same thing you were just talking about. And they concluded that there's going to be enormous alpha to be created in Chinese public equities over the next 10 years because of the lack of adoption of AI in a lot of these big names. So I think that's fascinating. I'm not smart enough to know whether that's good theory or not, but I know that there's a lot of people looking at that as an indicator whether or not they want to invest in the equities of these companies.
Just to add to David's point, a lot of these Chinese enterprises are adopting AI because all the AI models there are completely open source and they're so cheap. There's like 1/100th the cost of using OpenAI or Anthropic here. And the funny thing is not just the Chinese enterprises are using their own open source AI models. A lot of the US-based enterprises, some large companies, Airbnb. So Airbnb is not using OpenAI, is not using Gemini, is not using Anthropic. They're actually using an open source model called Chuwen. This is the open source AI model from Alibaba. And the reason that Airbnb is using that because it's way cheaper. It's not as performant as the most advanced model for OpenAI, but it's good enough for Airbnb's purposes. And so it's likely, I think that's something we should all be watching out for, that you're going to see more and more US-based enterprises, such as Airbnb and their peers, adopting more the open source models from China, not necessarily OpenAI. So
I want to change. Go.
Right. So is data kind of predicting that we're going to see the same thing happen with Chinese stocks that kind of happened with the oil and gas stocks 2 or 3 years ago, because the institutions were forced to sell them because of ESG, and now people have taken their money out of China because of political reasons, and then whenever things get resolved, that money will flood back in. Is that what you're saying, David? Is that analogous? Or I don't know if Tyson has thoughts on that.
I think that I mentioned it already, but do you want me to comment?
Yeah. Yes.
I think
I guess what I'm saying is this isn't really my theory. This is like the number 3 guy at Blackstone, who I've known for 30 years. He's a very smart guy. He's way ahead of so many people, and he runs $100 billion book there, including $2 billion minimums for family offices. So he invests all the sort of partners' capital. He's probably the smartest mind in Blackstone. So I was amazed by that, but he coupled it with some other things. He said that in China, there's enormous effort underway by the central government to increase the shareholdings by individuals at the retail level in China. And so they're rolling across these incentives across the country now to require companies to match their employees, sort of like what we've done for years here with the 401k matching program. And he thinks that'll also create enormous demand for equities at the same time. So, I mean, they actually think that they'll have, talk about alpha, they think there'll be, outsized gains to be had from large cap Chinese equities over the next 10 years.
Tyson, please.
I think that there is an argument that China could do very well, and going contrary to the crowd is a good contrarian strategy. I think that there is great innovative capacities with the Chinese, and I think that there's a real opportunity there. I take enough risks elsewhere in the markets that I'm not putting my own capital there, but I think owning companies like Alibaba has been a big winner. And going back to, I think that energy got super cheap. It had a great bounce from 2020 to 2022, and it's turned south. And I think because of the efforts by the Trump administration to bring a settlement in Ukraine with Russia, I think that I wouldn't touch the oil stocks yet, but I think that they'll be very attractive in the next 2 to 3 years. But I think that the one area that does make sense is obviously the gold area, the gold complex, the military metal complex.
Can I put a quick apostrophe on China? Not the topic we just talked about. I've invested in China. I even trained the Chinese sovereign wealth fund how to invest in hedge funds. So spent a lot of time there. The only apostrophe, this is not against anything that was said. From a purely mechanical, technical standpoint, it is a real challenge to invest successfully in China and in Chinese things. The domestic demand you talked about is probably the result that Chinese people, retail, call it what you want, are absolutely forbidden from investing in anything outside China. So you take that part with a grain of salt. But as foreigners, it's not a place they like you to make money and take it home with you. So it's a challenge. So if you're going to do it, just keep that in mind.
I'm native Chinese, so maybe I'll agree with Andrew. If you're a foreigner, or even if you're native Chinese, but your office doesn't have a presence locally, just write the beta. Like, don't even think about trying to capture the alpha, because to capture the alpha, you really need people on the ground. Because when those new things get priced in like in one day. It's not like here, it takes time to gradually price in. Everything get priced in one day. So you really need people on the ground. So they have your ears and eyes can react things quickly. That's the only way to generate alpha. But otherwise, just like write the beta.
I would add information flow. We had 350 people in Hong Kong office and had managers in Shanghai. Didn't spend much time in Beijing. The other thing I'd like you to comment, actually, as a native Chinese, the information flow starts out in Chinese, somehow ends up in English, and the information itself, and certainly the timing of the information, is not built to be digestible for non-Chinese speakers.
For sure. I mean, even this year, right? And this is like probably like 10, 20 years ago, but even this year, you guys all remember DeepSeek moment, like in beginning of this year. DeepSeek, the new model came out end of last year. So been around there for like 2 months. And all the Chinese investors, a lot of their hedge funds over there has been short the AI complex in the US because of DeepSeek was so much cheaper for already 2 months. And they're like a buffalo. There's no reaction from the US market until, I forgot, it's like Bloomberg or some media right here, start to pick up the story and start talking about DeepSeek. Oh, they're using, a small percentage what, the other foundation models here are using to achieve this similar result. And that really caused that big volatility in January.
Well, I think one of the things that's important to point out about seeking alpha is you need to go deep and understand something about the company or the market that you feel is going to unlock this value. And what I'm hearing in this conversation, which I agree with, is China is halfway around the world. Most of us don't speak the language, and the unique qualities about the Chinese domestic market are really not understood by most of us. So it's not a likely place where we're going to do super well, notwithstanding the fact that China makes some incredible products. If anybody's seen a BYD car, it really laps the Tesla. And I think most of the world is going to embrace it based on what I've seen briefly in Malaysia when I saw one of these things roll past me. But I don't know enough about BYD to know whether it's a good stock or not. Marty?
Today, because of AI, you can get Chinese information immediately, have it all translated into English, and read all the news feeds. Right, talk a little bit about Table, and I guess Tether is heavily used in China. But you can go on Chinese media and read all the articles about how to find Tether somewhere in a back alley, right? I mean, it's crazy. Right, so you can actually go directly from the source and get.
I guess to borrow a line from Wayne Gretzky, he would skate to where the puck was going to be. And I think in the same way, if you want to find the alpha, you need to get the information before it's published in the newspaper.
Right, they own up markets.
Well, I think that's what Andy was going towards with how you
Absolutely
become a
true.
resilient alpha generator.
Right. They own it, something that can't be substituted out,
Mm-hmm.
and that generates.
And Marty, the Chinese, I call it the Jack Ma effect, which is that until the Chinese basically put the thumb on Jack Ma, they were allowing 50% of the economy to be as capitalistic as it wanted to be. And so that changed when Jack Ma spoke out against the government and they basically shut him down. So it has become progressively more and more difficult because the BYD statement, they're going to dominate the world of electric cars. In fact, Chinese do dominate electric cars. But can you invest in BYD when the government's priorities are a major part of how they do business? And then how do you even extract value from its success? It's gotten very hard.
Yeah, so I would say even with AI translation, but to these two gentlemen's point, you need to know this information before they actually publish anywhere on Twitter or local media, right? That's really the key, because when BYD say, hey, look, we're going to do another round of price cuts, you need to know that before they actually do that to really capture the wave. Where it's like, hey, look, DeepSeek is pushing out a newer model, and the model is performing, hitting all the right metrics, can, really shake the market. You need to know that before any even local media pick it up, right? So that's really your advantage. That's how you generate that insight and generate that.
On the topic of AI, I want to talk about currently the disconnect between the private markets and the public markets a little bit. Specifically, right now, most AI deals are trading 40 to 50 times revenue multiples in the private markets, later stage deals, obviously. And currently the hyperscalers are pushing out their timeline, saying it's going to be longer. And what I'm curious about, and this is probably very important to a lot of people sitting in this room, is how is this going to play out? Sasha, I'll start with you on.
Well, look, I feel like Tyson said something earlier that I thought was really insightful, and we sometimes forget. History repeats itself, and we get caught up in the moment. Look, on the AI front, I think these things are being priced on hope and aspirations. You cannot foresee how they're going to play out. There are going to be some winners. There's clearly going to be some winners. We just don't know really who they are. So everybody looks like a winner today, and then when the dust clears, there are going to be a lot of losers. I think that the hyperscalers is a bit different. I think that's less risky. I think that's more focused on a tangible product, which is, power and access. I think that's more infrastructural. I think it's easier to look at the ROIs that they're going to be able to generate and have confidence in them. So I think they are different. But I would argue that part of the mistake we're making around AI, it's not that it's not going to happen. It's already happened. But picking winners is a very difficult thing to do. And we've learned that the hard way with the e-commerce wave in 2095, whatever year it was. Yes, thank you.
AOL, Yahoo,
but
all the great lessons.
Right. But my point is, I think people should be a lot more focused on finding niche business opportunities where there's a problem that needs to be solved. And AI can be part of that solution, but you don't have to pick the winner. It's like we're going to use some engine. It might be DeepSeek, it might be ChatGPT. It doesn't really matter. What matters is that company really understands a customer's need and really has developed the right product to address their needs, and they will use whatever tool it takes to get it done. That's a winning strategy, and you can have confidence in it, as opposed to I'm going to tell you, whether Ask Jeeves or Yahoo or Google is going to win the search war. That was a losing strategy.
And the hyperscalers, to your point, take it one step further. They're the infrastructure that AI has to run on. There's no AI in a data center. There isn't any. The AI is sitting somewhere else running in the data center. So the bet, to your point, is that we can't pick the winners and losers. So what we'll do is, we know AI as a thing isn't going away. And it's going to be used, and there'll be a lot of losers. There'll be some winners. But we're gonna invest in hyperscaling because everyone's gonna need it.
So we debate this like a issue or this like a question, AI bubble or not overbuilt or not overbuilt internally a lot. We don't have a perfect answer, but we sort of narrowed down to 3 metrics we really care about, and we would love to share with you guys, and everybody can monitor them. Number one is really just the total token usage. Google actually publishes that. A lot of the Chinese open source model publishes that. So right now, Google alone, I think their daily token use is roughly 43 trillion, and that's went up from like 13 beginning of this year or in the spring. So that went up a lot. So token usage, remember, that captures all consumer token usage and plus all the enterprise token usage. So follow that curve. I think that gives you a very good idea whether the demand is accelerating or not, because Google and some of the Chinese open source model do publish that. Number 2 is, is really about on the enterprise AI usage side, are we seeing enterprise paying for those services? Are they renewing? So when people say, oh, some AI enterprise startups say, hey, look at my annual recurring revenue numbers, great. That's a fake number. What you really care about is how many of the users are paying users. Are they paying full price? And are they paying full price paying users? Are they renewing the next year? When they do renewal at full price contract, that tells you the demand is real. So that's metric number 2. And metric number 3, I would say, it's very interesting, is to follow like what we talk about leverage a little bit. You think about the last financial crisis, even in the 2000s, like it's really leverage that eventually killed a lot of the players. So right now, NVIDIA is still using their own money. Oracle is borrowing some money. OpenAI is borrowing some money. Once everybody, Google and Facebook, start to using a lot of the credit or borrow money to finance their CapEx expansion plan, now that could be a sign of danger.
And a word of caution: I did my first semiconductor investment in 1994. I have followed the bouncing ball all the way to what you just said. So, and here's an example I think the audience can actually easily take. Remember about 5 years ago, all the Bitcoin mining people were buying the highest end NVIDIA chips because they wanted to mine Bitcoin and you needed this lots and lots of processing. Well, technology marches forward. And today you can buy a Bitcoin mining rig in a box that comes from China that doesn't need the highest, greatest technology. It's using 2 generations ago technology, and the highest, latest, greatest now is being put into the cutting edge of AI. And so why would anybody think that 5 years from now, that cutting edge technology that we're paying $1 zillion for is going to be what's generating AI? Now, AI comes in all forms. You want to train, which by the way, this is a real big deal. By the way, we're talking about tokens. He's not talking about crypto. When you train AI, you get tokens. Not
Okay,
this is not tokens.
It's a unit for
in crypto.
consumption. It's not crypto.
Tokens are
term in
way backwards. So what's happening is when you have to train something before you can use it. Now you can train it fast. You can train it slow. Nobody's typing anything, waiting for your answer. So you could use last generation if you want to wait. Can't use something too old, or we won't be around by the time you finish. But so there's this real stratification in AI of the need, the use, whether it's got to be real time, whether it's got to be cutting edge, whether this is good enough. And my Bitcoin example is one to take on.
We got a couple of them.
I can do without. So I would love comment from the panel on my thesis about what's going to be alpha AI, which is the technology is able to augment human intelligence. So what is going to stick in the long run? So make an example of intuitive surgery to make the best surgeon even better, right? It's going to stick. It's going to last longer than other algorithms type of AI. Going back to infrastructure that used to work for AWS, it's never. So which data centers going to be a safe bet? Best all data centers, not because as you said, some will be totally obsoleted by technology. But if you look into Norway, for instance, ultra low latency data centers close to medical universities to enable low latency search. Other example, biomedical. My point is what is alpha? Alpha is all about increasing the capabilities of human beings.
By the way, CoreWeave was a Bitcoin miner turned AI. Just FYI. So I'm gonna let Salah put on.
So my daughter's in medical school and called me one day and she said, I figured out what kind of medicine I want to practice. And I said, great, what do you want to practice? And she said, I want to do urology. And I said, great, neurology. And she said, no, urology. And that was a bit of a shock. But the reason I mentioned it is that they are having tremendous success with robotic surgery, especially around prostatectomy, much better outcomes. And it isn't all machine, it's partially machine, partially doctor, because there still is room, I don't know for how much longer, there still is room for the human to exercise some judgment, and the surgeon matters. I think that's the kind of AI-enabled, machine-enabled applications that we should be focused on right now, where we can see how the technology is enhancing the human performance.
And that's alpha you can measure.
That is absolute alpha.
Alpha you can measure.
The Da Vinci robot.
And it's the tool of AI, and it makes mistakes. So you better have somebody checking it.
Yeah.
But you're absolutely correct.
But there will come a point where you may not need the surgeon. And that day is probably coming in a lot of fields. And so focus on making money now. I don't think we want to try to foresee the future too far, because that's hard to do. But I think there's plenty of opportunity to find alpha in today's market based on application of AI or machine learning in discrete, understandable use cases. When you start talking about who is going to dominate the chatbot wars, I don't think anybody can do that. There's too many factors that are beyond our ability to foresee at this stage. So focus on the near term for alpha.
Yeah, so just 2 more examples on medical. So radiology, you probably know there's already a wide application using AI to help doctors to tell what's going on in the X-ray. stuff. The other one is like there's some startups catering to doctors. So when they talk with patients, they don't need to write down everything manually. They can just use a AI application to basically summarize the entire meeting. They actually do a better job than the doctor themselves. So those are two applications. And we're sitting in a law firm right now. You might know that actually a lot of like AI application catering to law firm, really substituting their juniors' work. I've heard mixed feedback. Some law firms really like it. Some lawyers, like, finds like, just okay, I need to check their work. Sometimes they're wrong, so I got to do the work anyway. So it's less useful. But I'm sure they're gonna progress and get better and better. So who knows? In 3-5 years, maybe the way law firms run, could be different.
It's funny because you mentioned that for the law firms. Then Marty had on a panelist once, Katya, down in Miami, and she has an AI specifically for that. She found that she couldn't sell it to law firms, but investment banks and financial people love it because you can run all your contracts through there and tells you where you're short and where you need to focus.
You can actually read the debt covenant, which they never do.
And you're going to say something. Chime in.
Yeah. What I was going to say is that I want to just confirm what was said because it's not new. This is not something that came up last week. 12 years ago, IBM took Watson, then the most powerful computer in the world. They used 10,000 mammograms to train it to identify which ones should be selected for further examination. Exactly what your radiologists do when you get a mammogram. Then they compared it. This is important. They compared it to actual radiologists on the same mammograms, and they got a 77% accuracy rate, not 100, which was better than actually slightly better than radiologists. So when you do this, you need defined, measurable, knowable AI results because AI is far from perfect. And so some things it's going to freaking fail. But IBM went through a lot of trouble to test it, verify it. I think they even sold that business recently, and they said because it still does it. So this is, I'm trying to give you something simple so you can then apply it to whatever the heck it is you want to go look at.
So Tyson, we discussed a lot of different things in trying to identify alpha here. And one of the things that we've kind of heard from past experiences in bad markets is, look for where all the debt's going. Don't try to pick winners and losers when you're on the upside of things. What are some other lessons that we should pick up from previous markets?
Well, I want to thank Andrew for the compliment, but really it was George Santayana who said those who do not study or remember the past are doomed to repeat it. And John Kenneth Galbraith basically, embodied that in his comments about the history of bubbles. And, Robert Shiller got a Nobel Prize for his behavioral economics work talking about irrational exuberance. But what I notice is, I've done stuff in all different sorts of sectors, and it goes back to something Andy says, what is knowable? And it's fairly knowable for me to figure out what the earnings potential of a miner is, but my ability to make any sort of thoughtful judgment in biotech or artificial intelligence is it is not knowable. And I think that it's very easy there are these self-reinforcing nature of, oh, well, I bought this and well, it's going up, and then you read why it's going up, and then you think you're an expert, and it's very easy to become self-deluded. And so, I think that really understanding, owning knowable alpha opportunities is really what is critical. And, for example, Argentina, Brazil, some of these South American countries, that's where the opportunity is, where you combine the kind of, when you can find really deep value and you understand how the hell it's working, because it's very easy to get sucked into herd behavior and say, oh yeah, well, everybody, I had a client like, we got, in the beginning of the year, we've got to be in AI. I'm like, no, if everybody's doing it, that's why we don't want to do it. Because what we want to do is identify, know something that most people don't understand. That's where the alpha is. Pass.
It used to be that we spoke about diversification of the assets, and that would help you through all markets and create not necessarily alpha, but at least preserve your income and your wealth. How should people be thinking about that today? Particularly family offices. Andy, do you have a few thoughts? Tice may have a few thoughts.
Yeah. The first thing is owning a lot of stuff is not diversification. Somebody was telling me they were making a lot of money investing in this micro loan platform, and they give out very small loans to small businesses on relatively short terms. And I said, oh, that's a perfectly valid specialty finance area. And the whole idea is, well, we could spread it out over all these companies. Well, let me tell you something. The first recession that comes along, all those companies are going to behave exactly the same way because they're all the same type of companies. So diversification is something that you should think hard about. And the easiest way to think about it is not what you're investing in. It's how you can lose money. It's what are the risks that I'm taking, and are the risks, you talk about correlation, but that's just mathematical. Are the risks in any scenario I can think of common in between the various things that I'm invested in? And that will tell you whether you're diversified.
I want to maybe just switch you over and talk about where we can find alpha in different sectors before we wrap up. So let's start with healthcare. Is there anything in healthcare you guys like and are looking at, Sasha?
So while I am personally focused professionally in financial services and business services, I've got two major personal investments in private companies in healthcare with a manager who's expert in that area. One of them is in care management, which has become a huge topic, and it's a mega trend, how to ensure patients can comply with their medical treatment. And there's a lot of technology and human elements being deployed against making sure patients behave properly. And these companies are doing very well. So I would focus on care management as one area. The other investment I made was in an early stage technology that is actually used to zap the tooth roots in children so that they never grow wisdom teeth. And you can literally make it so that a child will never have to have a tooth extraction. That to me is alpha. Okay, they have a patent that is hard to replicate. They've got a 20-year life to it. And this is a lot like braces. Everybody's going to want their children to avoid the surgery. So I find that defensible in my mind. I still have to execute, but I'm looking for things that I can understand and get my mind around that sound like this could be a long run. That to me is alpha. 5 minutes of alpha because you're the hottest AI stock for 5 minutes and then you get blown out by somebody else. It doesn't feel like alpha. That just feels like gambling. And so I try to find things that have structural advantage.
So the question was partly AI. So it's like that. I've been investing in medtech and biotech since the 90s as well. And so not everything is there. What AI is really good at is taking large, and I think this is where your example came from, large amounts of data and finding patterns in large amounts of data that a human would just take forever to figure out. So that's, to me, if I'm going to put a filter on what I'm looking at in healthcare that's AI related, that doesn't mean everything. It doesn't mean you have a heart catheter company, it's got nothing to do with AI. Just have a better arterial catheter. But the point is, look at what AI can do for something compared to the way it was done before, or it's doing something that simply couldn't be done before because it was too disparate and too expensive or too anything. So that's the filter I would put on it. I think if you talk about sectors, and like I said, I've been doing it a long time, is medtech, health tech is probably one of the best opportunity sets. And I'll bore you for 10 seconds because it was a year of my life. Probably nobody in the room, maybe Sean Kowaleski knows what liquid chromatography is. I spent a year trying to figure out what it was and then invest in it. Basically, drug discovery then was done by taking something and separating molecules into 10,000 different molecules that they could just try. Like it literally, they throw it at the wall and see if anything sticks method. Now you don't need to throw it at the wall because you got something that can look at 10,000 molecules and look for things that are working and just throw everything else out the window. So
Interesting. How about in the energy space?
So this is an area I have a particular interest in because of my interest in environmental services. I think there is a huge contrarian bet in alternative energy. I think just as an example, in solar, there's a lot of solar that is yet to be developed. It's probably going to be needed because of as we've talked about, the need for a lot of electricity. The people that have solar can't get financing, so they have to sell their solar to build more solar. And so there are buying opportunities that this is creating. If you're willing to buy somebody's existing solar, you can get it on cheap and then run it for 20 or 30 years. And this is totally counter to what you're hearing in the news. But the truth is, solar is here to stay. It's here to stay globally. If there's anything we've learned in Europe, the Europeans are desperately afraid of becoming dependent on oil because they don't have much of it. So solar is important to them. There are opportunities in Italy and Spain to get into solar in a very meaningful way. So these are things that while everybody's chasing AI, you need to focus on things like alternative energy and traditional energy because they're not going away. In fact, if anything, the world wants more energy and will always want more energy.
So, but if you want to invest in AI and energy, you have to add on to what you just said. So intelligent grids, intelligent microgrids that can adapt to both the sources and needs of energy situations, because before algorithms are used, but that means a human has to presuppose that something is going to happen or not happen, and then the program reacts to it, where AI can learn the patterns of energy usage and supply and adapt on the fly. So you're talking about production of energy. I'm talking about management of that production. So they're not separated from each other from where I sit in the least.
I think also mobile and modular energy is going to be something very much in demand, particularly around the data centers that are being developed. You've got your hand up. You have a comment?
You know how desperate it is? Microsoft.
Can I just repeat what he said? Just
I'm sorry.
People get online can hear this. So can you agree with the comment about the modular and mobile energy, particularly was they focusing on the nuclear energy and talking about I'm sorry, I forgot the term of art there. The smaller modules of modular nuclear plants that they can now develop and put in certain locations, and he was very bullish on that.
No, as I say, small modular reactors, but they're still perfecting them. So it's gone so desperate that Microsoft is investing in restarting 3 Mile Island, the one that was shut down. That's how desperate they are for energy. You know, Amazon has just put in the ocean super high protective cables because the ones that have all been cut, the power cables all been cut undersea. So they're going to great lengths. The part that I'm completely dismayed is the biggest construction in the country is in Virginia. The last place on the planet you would look for cheap energy. It used to be the Pacific Northwest, a lot of hydro. Used to be focused on Scandinavia, again, a lot of hydro. But and Texas is a big area which has a lot of wind and solar. But really, they're not really focused so much on the energy as much as I think they should. Toronto's building one on the lake because they run pipes into the water for basically heat pumps to cool the data center, which, by the way, Singapore has been doing on downtown for many years. So yeah, and again, This is where you can look at specific examples, back to what we've been saying before, and make your own assessments. The learning curve isn't that steep. But small modular reactors is kind of a whole speech on that. I'm familiar. The NRC is the problem, not the technology.
Yeah, I think that people have special permits from the NRC at this point, right? So they've got these 10 companies they've selected. One of them actually just presented to our group online. So we have separate meetings with our family office only. It's called ALO, AALO. And they had they've raised $350 million. The guy who founded it was a software guy who was a nuclear engineer trained. And then he spent some of his own money and recruited the top of the class. And so they actually, he says they're going to be live with their mini nukes in a year and a half.
Let's talk about defense now, security defense areas. What do you like in that space?
Well, I hate to say it, but if there's anything that we've learned over the last 4 years, defense matters. We don't have enough bombs. Nobody has seemingly enough defense systems. I think that's unfortunately, it's a bullish industry. I think the world needs more defense infrastructure. And I think that's a good area to invest in. It taps into AI for sure, but it also just taps into, unfortunately, armaments are a necessity. And there is a structural dislocation that has occurred because of just even trying to do this relatively discrete military interventions that have occurred to date has basically exhausted or partially exhausted some of our supply. So it's clear that that's an area that's going to go through a big renaissance.
That's huge. I mean, and there again, you go back to the mining, you go back to the different rare earth minerals that we need. They're very important to this whole industry. Right now, we're very dependent on foreign imports of all these. So now you're starting to see a resurgence of mines that have been dormant for a number of years come back to life and get investment within the U.S. So it's another area that could be interesting.
Just be careful of one thing in defense. You can look at this. It's not hard. Is that places like Lockheed Martin don't tend to make a lot of money because they have to invest so much in research to stay ahead of the curve that the production rarely catches up. On the other hand, everybody thinks of SpaceX and wants to invest in it. You can actually. I tell people there are 5,000 subcontractors for SpaceX. So instead of looking at SpaceX, there's 5,000 companies you can look at that probably most people are.
I actually looked at a company that just makes the propulsion systems, not for the rockets. When the rockets get up in space and you now have to put the satellites into orbit, they're tiny little engines that are put on the satellites. That's all they do are those engines. So I like the smaller opportunities that can get your mind around that are going to be bought by Lockheed because they're not going to be able to develop these things. And you monetize and get out, and you don't have to stay in a
No, plus they make money no matter. I mean, as long as Falcon 9s are going up, they're making money. Those are called reaction control thrusters. I'm a geek. But anyway, the things that small engines. But the point is, if Elon Musk wants to go to Mars and spend all that money on research to go to Mars, and SpaceX doesn't make money, his company's still making money.
Well, that's one of the interesting things. It's one of the interesting things about the hypersonic rockets that you're beginning to see. And Anderson needs to use that. Everybody's been trying to resolve the issue of solid or liquid and making that work throughout the whole trip. We're starting to see hybrid models now